He's Chief Market Strategist at Agora Financial. Alan, we've been talking Disney fundamentals all last week. What about the technicals? What does it mean to you?
Well, that's what it's all about. It's all about the price action. So looking at the Dow itself, let's back out here. The Dow itself, if we can have a full V recovery, as we've seen every time in history so far, it dropped, 5,000 points. You add that on top of those old highs, it targets 32,000 in the Dow, which is about 25-30% above where we are now. So I still see a lot more upside. Finally, stocks backed off just a bit last week after this big bounce, but I think we needed that break just to rejuvenate the markets one more time to push to the upside.
Yeah. All right. Now, so basically, Alan, Disney is a wave through exposure to the Dow. Essentially, I mean, is this kind of like a macro play through a stock?
Yes. Yes, it is. It's a low volatility stock, so it's a vehicle to participate in the high tide floating all boats is the theory here. So Disney's a stock that's been stuck between 90 and 120 for the last 4 years, going nowhere while the rest of the market obviously has rallied. So I'm looking for some momentum move to the upside here in this stock. Looking at it, the halfway point of that sideways range is 105. I'm looking at the July 105 call. It's trading for about $12 right now. It's a deep in the money option that's going to act like the stock. So instead of buying the expensive shares, I'm buying an in the money option that's going to behave like the stock itself. And so that's the play. It gives us about 4.5 months of time for good things to happen. The delta on that, meaning the relationship that it moves compared to the stock, is more than 80%. So will give us a good payoff on an upside move.
Yeah. Alan, and the duration of this is out to what, July? So you're giving it some time?
Yeah, giving it some time. I typically, when I'm looking at a stock substitution strategy, I want to buy at least 3 months at a time. So that's when the time decay starts to occur, when you get inside that last 90 days. What I want to do is take that out of the equation. This is a much better way instead of buying the shares, in my opinion, because you have less risk, you have less money tied up, and you're going to get the same payoff as you would when you have the shares. Also, you have the ability to ride through the ups and downs and look at things more on a weekly basis when you have the option, a limited risk option, as opposed to underlying stocks. So look for this to see some sort of breakout here, and let's see if we can get the markets on the move one more time.
Yeah. All right, Alan, on that note, if we keep you for another question, because right now I'm looking at a stock market that's coming back pretty solid after a little bit of a rocky week. NASDAQ's up 1% right now on futures. VIX with a pretty solid move downwards to 15. What do you think here?
Well, I think we needed that unwinding, some profit taking here last week. Now, it was really important to me to see how we recovered on Friday, and that was a pretty strong upturn, almost got us back to unchanged in the market. So that's usually a very healthy sign that the buyers are bidding it back up. Let's see this next leg. My focus is on Apple. Apple's making some new relative highs here, I think the highest since December. If Apple can break above 185, that's a midpoint of that drop from the top. That's going to carry the market, and we're going to get another explosion higher across the board.
All right. You're right. Apple, nice day. We got that BAML report. Facebook jamming too, both up 2%. Appreciate it, Mr. Nuckman.
All right. Thank you.
You got it. Alan's the Chief Market Strategist at Agora Financial. We'll be right back. Nicole's